Welcome to ForexTV.com. It's Tuesday, October 30th. I'm Remy Hookie for New York Forex Market Buzz. In today's North American afternoon session, Euro-dollar is trading at 144.26 as of 1:15 p.m. Eastern Time. The pair touched 144.37 earlier in the session. Meanwhile, sterling dollar is trading at $2.0669. Sterling hit a 26-year high against the dollar earlier at $2.0694. Meanwhile, dollar yen is currently trading at 114.89. And briefly, in U.S. economic data, the Conference Board's Consumer Confidence Index fell to 95.6 in October from a revised 99.5 in September. The FOMC meeting begins this afternoon at 2:30 p.m. Eastern Time, and the market is awaiting the Fed's decision on interest rates due out tomorrow at 2:15 p.m. Eastern Time. Joining us now is Rhonda Staskow from Thomson Financial. Good afternoon, Rhonda.
Good afternoon.
Thanks for joining us. Well, in the run-up to the FOMC, trading has been thin, and there has been some uncertainty about tomorrow's announcement, especially after this morning's Wall Street Journal report, interestingly enough. But what are your expectations for the rate announcement for both the benchmark rate as well as the Fed funds rate? And while we're at it, ranges for the majors, especially with dollar yen.
I think the Fed is going to cut 25 basis points for both benchmark and Fed funds, and I think they have no choice because they put themselves in a position now where the market is expecting some sort of rate cut, and to not cut rates would be detrimental. But I think they've sent a clear message to the market from the Wall Street Journal articles and also similar articles over the weekend in a newspaper such as the FT, that they don't want the market pricing in expectations that they will guarantee another rate cut following that, and certainly won't see 50 basis points. I think part of moves we've seen today, while choppy, have seen some specs who'd expected 50 basis points take that off the table. So you've seen yields go up, and you've seen the dollar get a little bit of a bounce on the back of that. As for expectations, not just going into the Fed funds, but really looking ahead after a 25 basis point cut, I think dollar Swiss has formed a nice bottom around 116. I think it has a risk to squeeze to 119, particularly if the Fed tempers their rate view. It's interesting to know that ECB Weber today made a point of indicating that he would not use a rate cut to deal with the liquidity issues, which I think is something the Fed might start looking at, and not use the subprime as a reason to cut rates for now until they get data that is more negative for the economy. So for the euro, too, we've seen it at record highs, and I think it's time for a correction. We can see that back to 141.50.
Speaking of cross plays, let's move on to the commodity currencies. In today's session, we're seeing crude oil and gold futures trade lower. But how are rate expectations as well as U.S. equities weighing on Aussie dollar as well as the Kiwi against the dollar, and in turn the Aussie and Kiwi against the yen?
Well, of course, we've seen Kiwi and Aussie come off in highs. So we did see the Aussie, of course, at another 23-year high this week. But that is, as I noted earlier, some of the positions squaring on expectations that we won't get 50 basis points. We may only get 25. So in the short term, we'll probably see the Aussie correct somewhat. Has a risk to go back to maybe 90, even 89 cents. But the market is looking forward to the RBA and expectations they will raise rates, not just in the coming meeting, but possibly one or two times later, which into next year, which will keep the Aussie supported, with some analysts looking for 93, 94 over the longer term as a result of that. And on the view, the dollar after
given us your ranges for the majors and the crosses, as well as your expectations for the Fed. But if you could tell us about price action you expect to see post-announcement, what are your ranges for the majors and crosses, and do you expect to see a short-term dollar correction right after the announcement?
Yes, I think we will see a dollar correction, particularly with the risk that the Fed may stand back and say they won't move any more on rates unless they happen to see more data that supports a slowdown, for instance, like the jobs data that we're looking forward to. So to that extent, I think we could see a pullback on euro, going back possibly to 143 even after some profit-taking shows up ahead of the jobs numbers. But of course, if we get a really lousy job numbers, we could see it go back up to 145. So the theme tends to be more volatility rather than not. As for dollar Swiss, if we see a break of 116, well, we target 115, but once again, we could see anything between 115 and 119 going forward. In terms of the data results, but also in terms of the risk to the market. And dollar yen, as I said before, it's still at 113, 117.
But tomorrow afternoon we have NFP on Friday, and we'll be getting NFP for the previous month as this month, as well as November, before the December 11th FOMC meeting. So taking into account the rise in recent weekly U.S. jobless claims and also the housing market downturn and soft sectors of the U.S. economy, what do Forex traders need to keep in mind in terms of growth and rate differentials?
Well, one thing they need to look at, too, of course, is jobless is always a lagging indicator. And the fact of the matter is, despite the recent pullback in jobs, which is clearly due to construction, and I would say the auto market, is that other parts of the job market still, and we have risks emerging for upside surprises, particularly into the holiday season, and some more short-term hiring in the near term. We keep that in mind. I still think the interest rate differentials will still weigh against the dollar. One of the key factors is the fact that for the housing, the resets that are coming up will not peak until the first quarter of next year. So overall, that's still going to keep the dollar under pressure going into 2008. In the short term, one of the positive factors for the dollar remains the fact that many funds close out their accounts in November, and it gives the dollar a boost just because
as always, thank you very much for your insight and analysis. That wraps it up for your Forex Market Buzz with Rhonda Staskow from Thomson Financial. I'm Remy Hokie. Join us later this afternoon Eastern Time for PM Exchange right here on ForexTV.com.